Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Thursday, February 5th, and my name is Raleigh White, and I'm coming to you live from a beautiful sunny day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, including he'll start out with a midday market analysis and give us an updated stock watch list that he's got his eyes focused on. And then he's going to pivot, folks. We're going to talk about what is the VWAP and why it's important in trading. Roger's going to share how he uses the VWAP and what an anchored VWAP is. And then he's going to share with us the key dates that are used to anchor the VWAP, and then how he uses the anchored VWAP for support and resistance, and how he uses the anchored VWAP for market timing and for confirmations in his A-line strategy. An awful lot of questions flow about what the VWAP is, what is it, how do you use it, why is it important, and we're going to cover that in detail today. Now, if you've got any questions during Roger's presentation, you're going to please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, I have opened up the chat window to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic and no political discussions at all. Also, keep side conversations between one or two people to a bare minimum, because all it does is interfere with the rest of us who are trying to listen and learn from the education and the information that Roger's sharing, because he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. Now, for those of you that were with us this morning for Roger's 8 o'clock pre-market briefing, you'll note that there were several catalysts on tap today that we needed to be aware of, dominated by the fact that we continue to have major earnings releases. On the tech sector, we noted that Google came into the open down 4%, ARM was down 6%, and we had Fortinet and ROK putting out earnings before market open. On the chip front, we noted that Avgo was up 1%, but Qualcomm was down a whopping negative 12%. On the healthcare front, Align was up 11%, and we had BMY, Bristol Myers, CI, and CAH also all releasing earnings before market opened. On the finance and the materials front, we had ICE and KKR and RES and LIN, all of these major S&P 500 companies releasing earnings before market open. In industrial and energy, we had CARR and ConocoPhillips and XEL releasing earnings before market open. On the consumer and the transport front, we had Hershey's and EL and CMI releasing their earnings before market opened. And then on the Fed front, we had a delayed JOLTS report coming out. We have jobless claims coming out, and we have one FOMC speaker scheduled to speak. So once again, a lot of activity here. And for those of you that are wondering, why do we focus on catalysts? Well, from Roger's perspective, if there's information that is known, for example, it came out pre-market or will become known during the trading session, but is not yet priced into the market, those are volatility flashpoints that we need to be aware of. So for example, if you're looking at the financial and material sector, you have several key companies have earnings before the market opened, and we have no idea what those earnings are going to do. So you need to be careful about trading in that sector. Now, as far as Roger's pre-market stock watch list is concerned, we see here that he had 26 tickers that he gave us this morning. On the short side, you can see there were 14 tickers, and on the long side, there were 12 tickers. Now, folks, these are legitimate tickers that Roger looks at. He begins his day by looking at which tickers are setting up to be potential trades. Now, these are not automatically stocks that he's going to trade, but they are setting up. And if in fact they give him the kind of confirmation signals that he's looking for, then these will likely be trades that he takes and he issues in the trading pit and his other premium alert services. One thing I also want to let people know is that when Roger puts out his tickers here, he does not scan for earnings. So some of these might have earnings associated with them, but that's on you to basically decide, to figure that out and decide not to trade that stock. So once again, when Roger looks at these stocks, he is not scanning for earnings. And then, as far as his pre-market watch list is concerned, I mean, his pre-market thoughts are concerned, well, we saw that the futures markets were all down across the board significantly in the open, whether it was tech stocks or whether it was blue chips, or the S&P 500, they were all down. We also noted that the put-to-call ratio was unbalanced and favoring the puts. And we also saw that the VIX continued to move a bit higher above the 20 level. Then on the SPY, the QQQ, the SMH, and the MAGs, we saw that they were all consolidating lower at support. Momentum looks to be stalled, even though some stocks are kind of balanced between those that are advancing and those that are declining. We did see that the sectors have really swung to the defensive side. We also noted that bonds remained lower in a downslope, and there's really nothing going on at this point in time to suggest there's going to be an upward move in the markets. From Roger's perspective, the chip sector is the stinker. I love the way he said that. The chips are the stinker. And he says, hey, I half expect a bounce, but the key will be this. Will dollars move from Dow to chips? That's what we have to look. Are they going to move from the blue chip stocks into chips? And if so, that might signal that there's a turnaround and a bounce in the market. So once again, folks, we love that you are here. We have a great group of people, and Roger's put together a super presentation for today. He's going to start with the midday market analysis and updated stock watch, and then he's going to pivot to one of the most important things I think you need to be aware of a trader, and that is all about the VWAP. What is it and why it's important? How Roger uses the VWAP, and what's an anchored VWAP? What are the key dates that we use to anchor a VWAP? And how do we use the anchored VWAP for support and resistance? And how do we use the anchored VWAP for market timing? And how Roger uses it to confirm A-line setup. So a terrific presentation focused on the VWAP. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone. And remember the ground rules. Number one, always be kind and supportive in your post. Number two, please keep to the topic. Number three, no political discussions whatsoever. Also, keep your side conversations between one or two of you to a minimum, because all it does is interfere with the rest of us that are trying to listen and learn from the education and the information that Roger's sharing, because after all, folks, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading. And with that, man, let's say hi to Matt. Let's say hi to Roger. Wow, what an interesting day here. And Raj, I remember I love the way you said it. You were so point blank. You said chips are the stinkers.
Yes.
Yeah. And so from that standpoint, and you said, hey, we're kind of set up maybe for a bounce or a recovery, but the key actor on this are going to be chips. Is money going to flow from those defensive blue chip stocks into the tech sector, into the chip sector? And could that move things? So what have you seen so far? Any surprises, any illuminations?
No surprises. No surprises at all so far. Nothing at all. Just a lot of chop, a lot of monkey business pretty much. And 1 second, I need to give Ileana a passcode. Sorry about this.
Yeah, no
I
problem.
apologize. It'll just take a second. Just need to get this taken care of for her. Come on, YouTube. Anyways, we'll wait for this to load. But so far, no real major surprises. The only thing I'm not liking really a lot is the fact that today, where yesterday it was just chip stocks yesterday. Today it seems to be a little more pointed towards the broader market, and that I'm not liking that much.
Right.
I do like the fact that the SPY is finding support near the 50-day moving average. That I'm very, very happy about. But near the 100-day moving average. But at the same time, 1 second, I just need to get this done for her. I'm nervous about the chip stocks. Let me go ahead and share my screen with you guys.
Yeah.
Today is like today is a weird day for me. Like, you ever have those days where just things don't go the way you everything is off, like everything is off. Today is one of those days where everything that can happen is off. One second. One
It's called
second.
piling on.
Is that what it is? Is
Yeah,
that
we
what
need
it's
to throw
called?
a flag on that.
All right, let me see if maybe Google goes. I can't seem to get it. Anyways, I'll have to do it for her later. Um, anyways, all right. So let's focus on this. So the SPY, as you can see right here, the SPY is. I'm sharing my screen right now. Correct?
Yep,
Okay.
absolutely. Yep.
As you can see here, we're coming off of the 100-day moving average. We huffed and puffed around here, but we really couldn't break through very much. And that's telling me right now we don't really have a lot of stuff going on. There really is not a lot of stuff happening right now. And that's a very, very good thing. But at the same time, it looks like we're still kind of hunkering around and building a base here at these levels. Now, if you look at SMH, that one is squarely bouncing nicely off the 50-day moving average.
Hmm.
And I'm actually bullish right now. I bought it yesterday. I didn't want to tell anyone to do this because this is not just one of those things I do myself because I've been doing this for a long time. But I bought it right here, literally bought it right here for myself. And I'm just kind of holding on to it right now, waiting to see what happens. We don't have clarity. We don't have any clarity right now, and we're not going to have any clarity till this is back above the 8-day. What we could do is we can just kind of huff and puff here for the next couple of days and build a base and slowly start coming back up here. Okay.
Hmm.
Now, some of the stocks like ADI, I mean, look at this. This is a chip stock.
Hmm.
Right? This thing looks fantastic. Hold on a second. Micron. Micron is still holding on near the 15-day, which isn't really all that bad. Okay, so there's a lot of things here that are just not looking. They're not really looking that bad. They're not really looking amazing, but they're not looking that bad. So we have to kind of let things develop right now. But remember yesterday when we were looking at this, yesterday, it was predominantly green and chips were like the red herring. Today, you've got everything down with a pretty broad market, but technology's not down over 1%.
Hmm.
Okay. Okay, I'll just give it to her after VIP room. All right. So my main concern right now is if you look at RSP, we're still doing really, really well here. Okay. We're not really doing bad here. We're not falling off the cliff. We're not getting extra choppy. We're just simply consolidating. But if you look at QQQ, here, let me go give you my other chart. If you look at QQQ, you could see we're really overextended to the downside. And I'm
Hmm.
going to tell you right now, this is way, 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 way overextended. Like way, way overextended. Just like this is overextended. See this right here? That's overextended. So I am expecting a pull up here. Now, the problem will be what happens after we get up there. Okay, what I want to know is what happens when we get up here. Are we gonna? Is this going to be a resistance level, and is it going to bounce down again, or are we going to come back up and break through it? If you look at the SPY right now, the SPY is just holding on to 100-day, and it looks like it wants to build on top of this. But I don't think we got that much more downside. I don't think we have that much more downside over the next couple of sessions, unless something really, really drastic happens with the market, and I'm not just seeing it right now. I think most of the bad news is pretty much priced in to where we're at right now. I'm just not seeing anything crazy or anything like that developing. Now, let me look at sentiment real quick and market momentum. Now, this morning, by the way, I found something interesting. This is the other thing. I like I'm saying, nothing is working today. I use TC2000, right? Look what I
Yeah.
put there. Ticker symbol CMA is not in there. It does not have ticker symbol CMA. Does not. Does not. I don't know why, but it doesn't have ticker CMA. And if you guys use TC2000, let me know if you guys get ticker CMA, because I don't know. I don't get it here. It's the only ticker that I don't get, but I'm not getting it. Not getting it.
It's a warning sign, Roger. Stay
Yeah.
away.
Yeah, exactly, exactly, exactly. So we got to be real careful here. Like really careful here. Okay, really careful with all of this stuff. Today's just a weird day. Now, market momentum via VIX. If you look at market momentum, we went above a certain level. Okay, we went above a certain level, but now we're starting to come back into that level. Okay, so volatility's coming down. My big beef today, unlike yesterday, is this right here. Bold is still going down. Okay, that's not a good sign. And ADD is right here at 800. So, and we went down to 1,000, but we haven't had any pushes here. So it's just one of those markets where earnings are really distorting things right now, and kind of giving us a very good reality check of what's to come. Now, if you look at VIX, we peaked out at about 23, and we're at about 20 right now. Okay, so that's not that bad at all. Okay, not that bad at all. Overall, I don't think we have to be that concerned. Unless VIX really starts coming up above this level. If it doesn't start coming above this level, I think we'll be okay. Okay. And what you're seeing right now in the bond market, this is flight to quality. Okay. This is coming in because the market's coming off. So just be careful. Oh, it completed its merger with CMA. Okay. That makes sense. Okay. That makes sense. Okay. That would make a lot of sense. Okay. So volatility is still leading down. It's still breaking down. And we know that SPY likes to gravitate towards it. So for the next half hour or so, don't be surprised if you saw a down move. Matt, are you going short here?
Nope.
Just staying away today?
For now. I want to see what the second move does.
Okay, I got you. All right, now here's the other interesting part. Look at market, and this is the Pro Trader dashboards that I'm showing you right here. And you could see what's leading and what's lagging. This is the SMH, this is QQQ, this is the Dow, this is IWM, this is MAGS, and this is RSP. And you could see that today, look at RSP, red. Okay? Look at IWM, red. But look at MAGS. Look at MAGS. MAGS are not doing that bad. QQQ, can't say it's doing great right now, but it's been green predominantly most of the day. And same thing with SMH. So it's not really looking all that bad. Okay. Again, I think we're seeing some sector rotations, and we got to be really cautious right now. But I think we're seeing more, and folks, please listen to what I'm about to say. I think we're seeing a lot more volatility right now than actual trading range. You see, it's one thing when you see the market moving like this, either up or down, that's sustainable, okay? But when you see this kind of crap, this is just like emotional buying and selling right here. So there's not a lot of sustainability, if you will, to this price action right now. So I would be cautious, but again, I'm not as fearful as most folks are right now, because RSP, if you take the mega caps away, we're still really near all-time highs. So I don't think we need to be I don't think we need to throw the baby out with the bathwater at this point yet. Okay. That's kind of what I'm trying to say, okay? Don't need to throw the baby out with the bathwater. All right. Just make sure she got what I needed, and we're good to go. Okay. Excuse me. Yeah, being patient, good. Yeah, too much tariff talk, this, that, but look at the equal weight SPY. It looks pretty good. Okay, so today I want to talk to you guys. Don't be surprised if we cool off a little bit because of this. This is the only thing that's right here. The divergence between this is SPY, this is a Vold, and the Vold usually wins the race. So be careful. Okay. Okay. Now, and there's not going to be a tariff decision till at least the 20th of this month. That's when they're coming back. We know that for a fact. Okay. Oh, I didn't know Jono was here. Hey, Jono, how are you? Good to see you here. Okay. So, folks, I'm going to talk about something really cool. I'm going to give you guys a really good lesson today, and I hope you guys pay very close attention. A lot of what I discussed today is actually inside a program called Quick Strike and the Full-Time Trading Bootcamp, which actually comes with Quick Strike. And we'll be talking about Quick Strike later today, but I want to explain to you what it's based on and what it uses. By the way, Matt, how we been doing in Quick Strike? Should have started with that. I don't want to put a foot in my mouth.
Let's take a look.
Let's take a look. All right.
Pretty
So
good.
here's yeah, go ahead, tell me. So here is what I want to teach you today.
I got it.
Go ahead, tell me.
81% win rate,
Okay.
1.39 profit factor.
Not bad. That's since we started, yeah?
Yep.
That's pretty good. Not bad. Not bad. All right. So let me tell you what I'm going to teach you right now. And I would highly recommend, let me give you the agenda, and you definitely want to take a piece of paper and a pen, and you want to write this stuff down. Okay. So we're going to talk about what the VWAP is. We're going to talk about why the VWAP is so important. We're going to talk about how to use the VWAP. We're going to talk about anchored VWAP. We're going to talk about what dates you need to set the anchored VWAP is. I'm going to talk about how to use the anchored VWAP and how to confirm with the anchored VWAP. Now, a lot of you are probably making bets that I'm not going to finish all this today, but I actually am going to finish it all today. I got it whole worked out. And here's what we need to do. Somebody forgot to forward my alert, my pit that we're starting. People don't know, so I'm going to do that right now. Okay, do that again. Trading zone. Okay, all right, now everybody has my alerts. Okay, because I want to make sure everybody comes in here. So let me start off by explaining to you what a VWAP is, okay? So let's pull up here's the VWAP. Let's pull up something that we all like. Apple. Okay, how about Apple? Okay. Yeah, and actually, okay, now it actually works. Okay. What you see here, you see these are moving averages. This is the VWAP. Trust me, take a piece of paper and a pen. You're not going to know when to stop. Trust me on this today. Okay. What you see here is the VWAP. What's the difference between a moving average and a VWAP? Well, notice how price really respects the VWAP. The VWAP uses something that these do not. This is just a mathematical formula. Okay, it was invented about 120 years ago, and it's just a moving average. Just adding all the numbers together, dividing it by the total sum. That's all what this is, a variation of it, okay? But this, my friends, this is something completely different, okay? This gives you the average price with volume. I'm going to say that again, volume. This doesn't take volume into account. So, now, why is it so important? Okay. Why is it so important? Okay. So, actually, you know what? Why don't I just use this as an example? So here. Why is everything I'm doing today so difficult? Okay. In Think or Swim, volume is as clear as day, Dr. John. As clear as day. As clear as day. Okay. This is the VWAP right here. This is the moving average. What's the difference? So let's say the VWAP is what? About 275.25. Okay. And the moving average is about between 274 and 275. Okay. This just calculates the closing price of every one of these bars, the moving average. This one right here, this orange line, it takes into account this too, the volume. So here's and if you don't think that's important, let me show you the difference. Let's say you have a price right here. This is a price, 280, okay? And let's say 10 shares traded at 280 and 1 million, okay? Million shares. Million. That's 10, and that's just 10. And here's 1 million traded here. So 1 million traded at 279. 10 shares traded at 280. According to a moving average, your price should be 279.50. Now, do you really think that's the real price when 10 million trading at 279 and only 10 trading at 280? No. Right? You know that the price is like 279.01. That's the volume average price. But so volume would be volume average price, the VWAP, this thing would be right here. Moving average would be right here. Okay? If you don't understand what I just said, please review this video. What I just said is very important. Okay. So, you could see now, well, Roger, how come you're using moving averages everywhere? I'll explain to you why I'm using moving averages. Because moving averages give me structure. They help me figure out what positioning we are. They're like a compass. Like having north, south, east, west. Now, am I going to rely on a compass to get me to where I need to go? Of course not. But I'm not going to end up going south instead of north. You understand what I'm saying? See the difference? It's nice to have a compass too, right? How far are you away from a certain area? How close are you to a certain area? Are you trading above or below a certain area? We don't use moving averages to enter and exit trades. Okay? But the VWAP we do. So the VWAP is 1,000 times more valuable. I think I'm catching a cold. My throat is starting to hurt. I think the VWAP is a lot more important because it's actually taking into account volume. And anything that doesn't take into account volume is completely useless. Okay? Completely and utterly useless. Useless. Okay. So now that you understand that example, let's talk about the VWAP, okay? Why is the VWAP? Oh, so how do you put on the VWAP, okay? Well, here, let me just erase all this. Actually, here, let me put on the VWAP. I'm going to put the VWAP on. Well, the VWAP starts here at the beginning of the day. It's already here, but I don't need to anchor anything. So intraday price data. I want you guys to write this down, okay? I want you guys to write this down. Intraday price data. Intraday price data, okay? The VWAP is always anchored to the beginning of the day, right here. It starts every day right here. And you don't want to use overnight data because it'll distort the VWAP, okay? So the VWAP is always pinned to the beginning of the day automatically because it's the VWAP. Now, aside from the fact that it shows us what side we should be on, the north side or the south side, why should we use this? Well, I'll explain to you, and I hope you guys are writing this down. A few years back, remember when we had COVID? And I want you guys to remember this. Everything I'm saying today is really important, okay? Like super important. If you guys remember, we had COVID a couple of years ago. While we were having COVID, a lot of people decided that they decided that they were going to retire from their jobs, and they were going to start working from home, and they were going to become stock traders. And a lot of them thought that they were going to become rich overnight. It didn't happen, but they thought it could happen. So influx of capital into the market started growing exponentially. And the federal government got really concerned about this whole fiasco. And they started having hearings. Now, I don't know if you guys know this or not, but hearings, you're sworn under oath. You're supposed to tell the truth. You're sworn and you can go to jail if you're not, right? Okay. So they had a couple of hedge fund managers, okay? As a matter of fact, they had the biggest fund manager who also happens to have a brokerage firm. I know it's a total coincidence, right? And I mean, of course, it's allowed, right? It's just Congress, right? Don't get me started. Anyways, they allowed this guy to testify, and he said that 60 or 70% of everything we do is based on the VWAP. All our orders, our buys and sells are based on the VWAP. Now, here's the interesting part. Every third order you place, he takes the other side of your trade. Every third order you place, he takes the opposite side of your trade. And he uses the VWAP. Sworn, under testimony. Federal government testimony, okay? Volume average price. We use volume average price to fulfill the majority of our orders. And you guys you're trading against him 33% of the time. Okay? 33% of the time. 33% of the time. So if you're trading against somebody 33% of the time, and this guy's a billionaire, and I'm assuming you're not. If you are, that's great, but I'm assuming you're not. There's not that many of them out there. I'll talk about him, his name. I'll talk about all of it. I'm just trying to get you guys warmed up right now, Adam. You don't have to remember any of this. You just need to understand the gist of what I'm saying. So what he did was he basically said, okay, all right, since I got to tell the truth, I'm going to tell you the truth. We use the VWAP all the time, always, for everything. They fill what this market maker happens to be accountable for 33% of all trades on Wall Street. Okay? All trades on Wall Street. Every trade on Wall Street. Hold this up 1 second. I hope you guys are enjoying this session so far. Okay? Now, so after that came out, people were like, wow, we got to start using the VWAP. Okay? And the VWAP is great. I use the VWAP to day trade all the time, every single day. Every one of my charts, look. Every one of my charts has the VWAP. Speaking of VWAP, you see the SPY? See how price is going up? That's the VWAP. Do you see where we bottomed out today? Do you see where we bottomed out? So look, we went up. We went up. We went here. And then we went here. Now, I don't know about you, but do you guys remember somebody telling you a long time ago in a history far away that whenever you have a level and you go above that level, you get a confirmation, you buy right here, that's your entry? Remember that? Remember? I said if there's one pattern you never want to forget, it's this one. Well, surprise. There it is. There it is right here for you. There it is right there. There it is right here. Look. Pow. And that's a confirmation, by the way, to buy right above here. if you follow my confirmation lines. But where's the line, Roger? Where's the? It's right here. There's your line. There's always a line. There's always a line. But I don't day trade. I don't care. There's always a line. This is a daily chart. There's always lines. But I use 1 minute charts. There's always a line. Okay. I try to teach to the least common denominator, meaning what I teach, I use the shotgun approach. I want it to apply to everybody and everything. Okay? Because I know a lot of people here do different stuff. Okay, so at least now you understand what a VWAP is. Now, how do you use the VWAP? Well, I'll show you how to use a VWAP. You only go long when assets are trading above the VWAP. That means the asset is being accumulated. You only sell assets below the VWAP. One of my favorite strategies that I use every single day is to wait for a strong trend like this and then a pullback to the VWAP to go long. Okay? In other words, that's the VWAP right there. You go long right here. Okay? Right there. Okay? So the VWAP is a very, very important tool. And if you think I just use this on its own, no, I don't. I always look at the daily chart. And this daily chart doesn't look great right now. It needs to come back up here. But let's take a look at this, for example. So,
hey, Raj, just a quick question because there's several that have come up here. The
Of course.
anchor, the VWAP, is that applied on a daily chart or is it only for intraday?
Can you tell the people that asked that question to stop trying to sleep with somebody before they know if it's a man or a woman? We haven't got there yet. We haven't got
I'll
there
let you
yet.
tell them that.
Thank you.
Okay,
Thank you.
all right, I got
We
you.
haven't got there. We've only just begun. We've only just begun. I'm going to be very thorough with everybody today. Okay. All right. So here you got your daily. You're bouncing off the 8-day EMA. And here's your VWAP. You're above the VWAP. So you would start with the daily chart, make sure the daily chart is kosher. And then if you're going to intraday trade, you would look at the VWAP. In here. Okay. So above the VWAP. Okay. Above the VWAP. All right. Now, well, Roger, I don't day trade, and this doesn't apply to me at all, and I don't really care about this whole VWAP business because I'm not a day trader. I'm a swing trader. Glad you're a swing trader. I got something for you. So, if you're not a day trader and the VWAP doesn't apply to you, well, guess what? You used a thing called the anchored VWAP. Notice I didn't use the word VWAP. I said anchored VWAP. Okay. When we talk about intraday charts, we use the word VWAP. When we look at daily charts, we use the word anchored VWAP because it's got to be anchored somewhere. It's implied that the VWAP in the intraday VWAP is going to be anchored to your 5-minute chart, but with the daily chart, you got to anchor it somewhere. It doesn't just appear magically. Okay. So I think we're getting to the part that the people were asking about right now, Raleigh.
Mm-hmm.
So what is the anchored VWAP? How do we use the anchored VWAP? Why is it important? And why does everybody here today should be watching it? Because everybody here swing trades, right? So now we're talking everybody's song and dance. So you may or may not see, but there are three places to put your VWAP. There are three places to put your VWAP, okay? Anchored VWAP. And the anchored VWAP is the same thing that I've just explained, except it tells us whether over a certain period of time, buyers or sellers are in control. Let me give you an example. Right here. So right here. Okay, perfect. see. Yeah, that's what I thought. Okay. So you see the dotted lines here? You see the dotted lines? Dotted lines? These are my two VWAPs that I have on every one of my bar charts here. Where do I set these VWAPs? I set these VWAPs at the beginning of the year, first day of the year, and at the beginning of the quarter. But I cheat a little bit. I don't set it in the beginning of the quarter. I actually set it at slightly a few days before the beginning of the quarter, because that's the Friday before the beginning of the new quarter is when we have quad witching. It's when we have option expirations. And when we have option expirations, you have a lot of volatility, a lot of rebalancing there. So I like to set it a few days before, so you could see it right here. Here's the quarter VWAP, and here's the year-to-date VWAP. This is the beginning of the year, and this is the end of the quarter, or the option expiration. So I set two VWAPs on every one of my charts, and the third one I use for confirmation, okay? So I'm not done yet, George. I'm just getting hot. So you see right here, these two VWAPs, I have them on every one of my charts. So for example, here's the SPY. You could see where the VWAPs, they're right here. Fair values right here. Now, what does that mean? What do I mean by fair value? Well, it means now listen, and listen good. And if you don't think this applies to you, it does, whether you know it or not. See this area where we attach the VWAPs? This is where they start, okay? And this is where they end right now. And you could see they happen to be close to each other right now, right here. Anybody who bought right here, from here to here, is right now losing money on average. Because this calculates how much they bought, not just what price they paid for whatever. So right here, from right here. So you want to know, hey, from the beginning of the year. So let me ask you this question. Maybe I should have started here. Would you like to know if anybody between the beginning of the year and now are making money or not in the stock market? I could tell you that. See, from right here to right here, look at the VWAP. We're right below the VWAP. If we go right here, if we go to 689, then we'll be even. If we go to 692, we'll be in profit. That's the power of the VWAP. So I could tell you from any point of time where I anchored it, who is in control, buyers or sellers, based on where the VWAP is. And again, we anchor the VWAP every year to the beginning of the year, and every quarter we move it to the new quarter, okay? The anchored VWAP. We anchor it. So let's review before we move on. Before I move on, would you tell me if this information is useful to you guys? And yes, you use the intraday VWAP to confirm and tighten up your entries that you found with your swing tradings using anchored VWAPs. Yes, Phil, the answer is yes. So I want to see how useful this is to everybody. Did I tell you you're going to have a really useful session today or not? All right. Wait till you get till I get into all the details. I'm just getting started. All right. Raleigh, any questions that you want me to answer at this point?
Yeah, there was, and I think this is a great question.
Yes,
and
please.
and he says, Roger, I'm a little confused. He says, I get it that, it's recommended that I should go long if a stock's above the VWAP or go short before if it's below it. But if the VWAP is fair value, doesn't pricing want to come back to fair value? It almost sounded counterintuitive. Make sense what he said? In other words,
it's not about coming to, it's about who's in control. Who is in control? What it's telling you is from wherever the VWAP is, you don't have any overhead resistance. You don't have anyone to sell to. Everybody's happy. That's what this is telling you. It's not thank you, sir. We're not talking about overextended, underextended. What I'm talking about is this. Anytime I buy something, I want to know, do I have a bunch of overhead sellers that are pissed off and want to sell to me? Okay. That's the first thing I want to know. That's what this stuff tells me. I know right now with a 100% certainty here, year to date, I know right now from beginning of the year, I know that every one of these folks right now, on average, every one of these people are underwater right now. But when we get to 691.50, none of these people are going to be underwater on average. They're all going to be in profit. Because you see, oh, well, what about this guy, Roger? He didn't buy over here. He bought all the way up here. This is higher than this, so he's still underwater. But you don't know how many shares he bought. He might have been buying all the way from here to here, you see? So what this does is this is telling me volume-based priced on the average, so I know how much overhead resistance I have on top of me.
Okay.
Capiche?
Yeah. And I like the fact that you said this also shows institutions are accumulating or they're liquidating their positions. So,
Yes.
folks, once again, unlike the 8-day moving average or unlike a stock that's overextended that might come back to its moving average, and I think that's what people are responding to, this VWAP and the anchored VWAP shouldn't be viewed that way.
1 second.
Yeah, and folks, for on the anchoring, once again, as Roger said, there are two anchor points. One is the beginning of the year, so that would be an annual anchored VWAP, and the other one, he anchors it every quarter, just before the quarter on that Friday where we have quad witching. Those are the two anchor points that he uses.
Yes, for now, those are the only two things that I use. Okay, those are the only two. Yes. Okay. Okay. All right. So for now, I haven't shown you the third one yet. I haven't shown you the third one yet. All right. So does everybody understand at least where we're at right now?
Mm-hmm. There's still more questions that are coming in, Roger, but I think that you're going to address many of these as you go forward in the presentation.
Yes. Okay. So yeah, I just want to make sure everybody understands because again, I have a lot of stuff to unload for you guys today. So I showed you the two VWAPs. I showed you now what I just explained about the anchored VWAP. Here's where I want to make sure you guys understand. Let's say you're a 1 minute scalper on the SPY, or let's say you use monthly charts. Everything I just explained applies to you equally. You understand that, right? I'm going to say this again. Because you see, here's what we have a lot of people here who have selective, they're always asking themselves a question, what's in it for me? What's in it for me? And they tend to tune out and then they tune in and then they realize it's too late. I've already said what I wanted to say. So I'm going to say it before. Whether you are a 1 minute scalper or whether you are an investor, long-term investor, what I'm saying applies to you equally. Because if you're a 1 minute scalper, you would use the VWAP, right? And it's automatically attaches to the beginning of the day. And if you're a swing trader, then you would use the anchored VWAPs here. Or if you're a position trader, or if you're an investor, you could still use the VWAP. So what type of a trader you are or what you trade completely is irrelevant to the VWAP, okay? Okay. Just want to make sure you understand that what I'm saying is very much relevant to you. Okay. So now, so in other words, let's say we're day trading. The VWAP would be your support level. You want price to be above the VWAP. Let's say you're swing trading. Okay, great. We want price to be above the VWAP. If the price doesn't get above the VWAP, then we're not in a good position. Okay? As I mentioned, it's the dotted lines. These are the dotted lines.
Roger, is there a way to expand that chart? Because the lines are so close together. I don't know.
I did expand it. I actually expanded it all the way a year to date, which is where they start.
Oh, no, it's just, once again, never mind.
I mean,
I
I
don't know
don't
if
know.
there's a way to the microscope, because the lines are so close together, people aren't necessarily seeing what you're pointing to.
Right. Okay. Well, this is okay. There's a blue and there's a pink, right?
Okay.
The blue one attached right here. See 1219, the blue one?
Mhm.
That's quad witching, okay? So look, let me give you this. Quad witching dates 2026. Okay, you see these dates? Those are the dates you change your VWAP, and that's where you set it to. You're welcome. I don't care what you do. You need this. I don't care what time frame you trade. I don't care if you trade short or long. You
Right.
need this. So every quarter, you change it to these dates. And if you need to find them again, just type in quad witching dates 2026. I told you, take a pen, write it down. You're going to need a pen for this session. Okay. So let's go back here. And then the other one is right here. You see 1, 2, beginning of the year. I'm sure everybody can remember that, the beginning of the year. So I have one at the beginning of each quarter or a week before that, quad witching, and I have one beginning of the year. And I change it. Here are your dates. Here, I'll give them to you in the chat, okay? I told you this was going to be a good session.
Oh, yeah.
You're
And
gonna
this is
need
where
this.
you anchor the quarterly VWAP.
Yeah. Yeah. And right now, as we're speaking, you know what your brother's doing, Raleigh?
He's teaching a class on this, isn't he?
He's teaching a class of how to find it in Thinkorswim and TradingView so they can anchor it.
Right.
Okay, now I have another. Now I have the bonus special. There's always a bonus. I love bonuses. I'm getting too excited about this. One second, please. Okay. All right. Sorry about that. Kim. So Kim, let me ask you a question. Kim says we haven't hit the first quad witching date in 2026 yet. Well, Kim, do you remember what I just said a minute ago? I said to you that I usually set these a week earlier than I'm supposed to. And last I checked, Kim, the first quarter started January 2nd. So your VWAP for the quarter, for your quarter, would be right here. Oh, right here. So most folks start their VWAP first of the year, and first year would be the first quarter. So they would be completely on top of each other for the first quarter, but I start mine a week earlier. So yours would start January 1st. Okay? And then January, February, March, and then April 1st, you understand? Go there. All right. All right. Kim, you would still be last quarter. You would still be in 2025. You understand? Okay. Here, let me make it simple for you. Quad witching dates 2025. Kim, here. Here's your date. Okay? You got it? There you go. I was trying to go forward. You wanted to go back. Okay, no problem. I got you. I got you covered. Okay. Okay, Roger. Well, you've explained to us when you look every morning on your charts, every morning you're always giving us, like this morning when you were going through your short list, you were giving us these stocks, and they were all the shorts are always below the VWAP, and all the longs are usually above the VWAP or right at the VWAP. See, the VWAPs are right here. This is our long. This is our stocks from this morning. See, look at the VWAP. See how it's using it as support levels? That's your line, okay? You know, Raleigh, the things that I've taught this class just in the last 3 weeks, I mean, it's probably like a $4,000 class on its own. I'm not kidding, you know? Okay, so now for the big surprise. You guys want the big surprise?
Let's go for it.
All right. Now, remember earlier today, I told you that we have 3 VWAPs, not 2 VWAPs, but 3 VWAPs, right?
Yep.
So, and I told you that I'm going to show you how to use the third VWAP for price confirmation. Confirmation. The first 2 were used for price acceptance. Acceptance. Do we have clearance? Do we not have clearance? But this one is used for price confirmation. Now I'm going to put everything together for you right now. Do you guys want me to put everything together for you? All right. Do you remember what I was telling you, how the VWAP, the anchored VWAP, can tell us if anybody bought over a specific period of time is in the profit or not? Okay. I remember teaching this to Richie. He loved this. He loved when I taught him this. Remember Coach Richie? I don't know if Richie's here right now, but I taught him this on Coach. So this is the previous high, right? And I always tell you guys how I love pullbacks from previous highs. We call them A-lines. How do you know if an A-line is ready for action? You take the anchored VWAP and you post it to the previous high, the last previous high, because you want to see if anybody who bought here into the pullback is now making money or losing money. Here's your VWAP. What side of the VWAP are we on? This side or this side? This side. Brings back everything I just taught you. That brings back everything I just explained to you. So this tells us, hey, these people, this is the high, right? Price hasn't gone higher than this, right? That means everybody here is losing money. Everybody here is losing money. And what you may think is, well, we need to come back here to make sure that everybody here is now back to even or making money. No, according to our VWAP, everybody who bought right here on average is finally making money. Not here, but right here past this point. Here's your anchored VWAP. So what I'm using the anchored VWAP is to identify stocks that are ready to come back after they've pulled back. So I know that if I'm on the side of the buyers or I'm still have to overcome selling pressure to get up there. Understand?
That's huge, Roger.
Yes.
So there are 3 anchored VWAPs that we want
Yes.
to drill into people's heads.
Yes. And if you think that what I'm teaching doesn't apply to you, or if you think what I'm teaching isn't relevant to you, then you either don't get it, or B, you really don't get it. Can I list them? The annual VWAP, the quarterly or the quad VWAP, and the previous swing high VWAP. And you use the main ones. I use them in the morning to see what side I'm on, and I use this one to determine whether I have confirmation on a move.
Yep.
See, if I was okay, so let me delete this VWAP. Okay, so I just deleted it. So you're looking at this price action right here. Okay. Oh, great, we're above the 50-day moving average. Okay, great. We bounced on the 100. We're above 50. I can buy here. Okay, beautiful. But wait a minute. What about all these folks? There's a lot of resistance here, right? Right here. All of this. Let's see. We put a VWAP to the highest high, and the VWAP tells us that after 153, everybody that bought here is now cleaned out, that they're whole. Now everybody here above the VWAP, that means everybody from the point of this VWAP is now in profit zone. Don't use them, Lloyd. Don't use them. Okay? Use them separate ones, like I'm showing you. So let's summarize what I just showed you, okay? The VWAP stands for volume weighted price. It's a moving average that takes volume into account. A moving average takes no volume into account. So if you have a guy who bought a gazillion shares here and a guy who bought 1 share here, and I'm not being sarcastic, it will treat the average of them equally. Okay? That's like taking a guy that smokes 5 packs a day and a guy who smokes a cigarette on his birthday every year. and treating them exactly the same way. Does that make any sense to you? Again, do you see the difference? You got to put certain weight. You got to put a certain weight to certain things, right? That's what the VWAP does. It actually takes volume into account. Okay? Yes, David, you can, and I'm going to talk more about that. You could anchor to certain events. Yes, you can. You can. You can. To see if price has assimilated those events. You absolutely can. But the way I like to do it is I like to wait for pullbacks on stocks, and I like to wait, and I put a VWAP at the previous high, and then I wait for the price to get back above the VWAP. And if the price is above the VWAP, then I know that buyers are in control. So let me just try something here. This is Taiwan Semiconductor. When we get to this level, see how okay, we entered this right here. We don't have to worry about any of that. But here's an anchored VWAP. Here's the stock made an all-time high, right? Or a swing. Yeah, all-time high. Okay. The stock made an all-time high. And then it started selling off. How do I know when everybody here will be made whole and not holding the bag anymore? When price goes above 336.78. Yes, Linda. Yes. Raleigh's brother's teaching that right now in another room as we speak. Okay. So do you guys understand the power of this? It's a real powerful indicator because it takes volume into account. Okay. Now, what I'm going to do is I'm going to give you right now a structured class on the VWAP and the anchored VWAP. And I'm going to give you the name of the hedge fund manager. And I'm going to give you dozens of other examples. And I'm going to show you another way how I use them. Now, if you don't think this is important to you, then what you're pretty much saying is I'm not interested in learning how institutional traders execute. And I'm not interested in figuring out how they take a third of every one of my trades. Okay. So, Raleigh, do we have any questions before?
I think basically I love this one question, Roger, because I love the way people are thinking. So here's what John says. Hey, Roger, can I use the VWAP to look at my portfolio and weed out the laggards and keep the flyers?
Don't do that.
I see where it's coming from. He's
Yeah.
going like, this is great.
Yes, it's very similar to point of control. That's exactly what it is. It's a point of control for stocks, John. That's exactly what it is. Okay. Very important, right? Very, very important. Okay.
So a couple other things I want to share with people before we move on. Number one, folks, a lot of people are saying, hey, where can I get a recording? All of the recordings of the VIP trade room, you can see them in Roger's YouTube channel. And I just put a link to that there. Then the next question that came up is, Roger, people were going like, Roger, I can't be in two places at once. I can't watch you and I can't watch Campbell. What am I supposed to do? Well, there's another link I'm going to share with you. Here's the link to customer service live recordings.
Oh my.
If you go to that link, you can see their recordings. And so you'll want to go today. And by the way, this is not the first day that they've done this. They've done this in the past. But between Cam, who's an expert on Thinkorswim, and Gustavo, who's an expert on TradingView, today their focus in concert with this presentation is how to set the VWAP and the anchored VWAPs on both of those platforms. So I wanted people to have that, Roger, because and once again, Customer Service Live, that's an incredible library of information that's sitting there. So I thought that would be helpful for folks that are here. And then I think the last heads up I have to give, Roger, is for those people that are on YouTube, now would be a great time for them to come over into the Zoom room, because you're going to give a deep dive into the VWAP and a program that you have that's built around finding specific alerts using that huge tool. And we can't share that with you on YouTube. So for those of you that are on YouTube, please come on over to the Zoom room and to watch the rest of this presentation.